Ladies and gentlemen, it's time for the main event, the Fintech Fight Club Cage Match Edition. Introducing our referee, J.P. Nicols. Our first contestant, Wade Moov and Groove Arnold. Our second contestant, Ambika, the Bay Area Bruiser, Sharma.
And then it's coming out with you.
And our third contestant, Lindsay, Knockout Davis. And our final contestant and reigning champion, Ron the Shiv Shelvin. We haven't even started yet, and it's already getting violent up here. I'm going to turn it now over to our match referee, JP. I'm getting out of here.
Where is your robe?
My robe is hanging in the Fintech Fight Club Hall of Fame. Something for all you losers to aspire to.
Somebody's too good for the gown.
It's starting already.
He's arrogant.
And we have the slides up, please. This is the Fintech Fight Club Cage Match. This is a tag team event. This is for the Undisputed World Championship. We have 3 5-minute rounds, and the first round is... Oh, there's the cage. First round...
Let's get ready to rumble!
Woo! Let's do it.
Ron the Shiv Shelvin versus Lindsay Knockout Davis. And you are fighting about... We're already past peak crypto. Ron, as champion, you go first.
Boo.
We are nowhere near past peak crypto. Not even close. Here's why. Number one reason, if you remember back a long number of years ago, P.T. Barnum said, there's a sucker born every minute. And as long as there's a sucker born every minute, we're nowhere near past peak crypto. Other reason, though, and more seriously, that why we're nowhere near past peak crypto, is that this is a blip, and it's a correction in the scheme of things. And yes, it was a big dip in prices, but there's huge demand out there. And as you know, many of you, from the financial institution perspective, start to offer crypto, and you heard some vendors today who were demoing their capabilities. You're going to help legitimize it, make it easier for consumers to invest in crypto, better to integrate it into their portfolios, and ultimately integrate it into their payments. So we are nowhere near past peak crypto.
We're not past peak crypto, sir, because for none of those reasons that you just stated. Actually, it's much bigger than that. When I think about peak crypto, when I stand on this stage thinking about a new land, it's one where more than 2% of the population own 98% of Bitcoin's wealth. One that is more democratized and accessible and regulated with liquidity, and people have access to products and services that we haven't even thought of yet. Someone tap in.
Uh-oh. Wade wants tagged in.
Ron Shiv, the Shiv. We are way past peak crypto. I mean, you think about it, community banks who have never sold corn futures, have never sold securities, have never helped in investments of any kind from an equities or security standpoint, now all of a sudden are going to sell cryptocurrencies? That seems like a good idea. Once you know the bubble has burst is when people are running after cheap money in order to figure out a simple way to not do any good for their customers.
Oh, another tag in.
When I think of crypto and I'm at the peak, I see a vision where there's inclusion, where people have access to more financial services today, those financial services that are not provided to many individuals. I don't see that yet, so I don't say that crypto is at the peak.
You only think we're past peak crypto because you sold your crypto. So go for it, buddy. Now that you're out, we're past the peak.
That might have been below the belt, but I'll allow it.
I mean, 17,000 was good for Bitcoin, right? Oh, you win.
We're done. I'm good.
Next, sir.
That's it. Well, we'll end that round early then. So, all right. Next round. Ambika The Bay Area Bruiser Sharma is going to take on Wade, Moov and Groove Arnold, and your fight is over. Traditional bank M&A is dead. Ambika, your move first.
I wish traditional bank M&A was dead because we would actually have innovation then. It's not dead. We are a country where there are such things as too big to fail. As long as that exists, banks cannot fail. Inefficiencies will not get rid of, so they only have an option to buy other banks as a way to grow. It's not, it's a fact that today big banks are not growing organically. So the only way they have is either invest in technology to be competitive and or buy their way out. So that's the only way to have growth, as long as we have too big to fail.
Who wants to punch in on that one?
I'll punch in on this one. So is the M&A is dead? Absolutely. From 10 billion to 110 billion, we've seen a handful of institutions try and merge together because they're going to go knock Jamie Dimon out when they get over 100 billion in assets, and they can't compete. They aren't getting at a big enough scale, and all the deposits are still running to the biggest banks. And then under 10 billion, the community banks are figuring out how to differentiate and redefine the term community, and they have this little Durbin kicker that's letting them make a little bit more money than normal. So is M&A over? I think so for now.
I'm with Wade on that one, but my perspective is what's dead can never die. From our vantage point, when I used to analyze this data at CB Insights, banks were the biggest losers when it came to M&A in fintech because mostly they had to hold that same acquisition cost as goodwill on their balance sheet. So it was far too costly, especially at the valuations that we've been seeing in the frothy fintech market. However, M&A could survive in a scenario where banks actually want to get up off their seat and bring new products and services to their customers.
You were right. And here's why traditional bank M&A is nowhere near dead. Nowhere near dead. Number one reason why. If you're the CEO of a $100 billion bank making $10 million a year, you think if I can just merge with another $50 billion or $100 billion bank, I'm going to be making $30 to $40 million a year. That's what's driving bank M&A, and that's nowhere near dead. Number two,
is that correlated to the sucker born every minute?
That's my motto, man. I should have come up with that one. Number two, as long as there are bank executives who think that the path to gaining economies of scale is by buying other banks with similar products and services, we're going to continue to see bank mergers. You were right in that it's the wrong thing. We should be scaling through technology, but traditional bank M&A is not dead. You want to get back in? Are you good? Anybody
I'll
else?
come in real quick because the synergies just aren't playing out, are they?
Nope, they're not. But it's not dead.
I will say the bank M&As are becoming more expensive. They're not dead, but they're becoming more expensive.
Tagged in, lady.
Yeah, here we go. They're becoming more expensive. We can use the example of US Bank Corp, which is aiming to purchase Union Bank. They put a price tag for $8 billion, and it's held up for regulatory approval. So what do? They create a $100 billion fund to try to get regulatory approval. So I think the mergers are not dead, but they're becoming more expensive. So whoever has the money will win this game. Who wants in?
Yeah, not only are they getting more expensive, but again, it's dead because we've got a more tight regulatory system. You've got the FTC looking at every single deal, putting their hand in a pot, trying to prevent innovation. So what would incentivize you to want to go to town on something where you're going to get hung up in regulatory complexity and the deal's never going to get done? It's just a waste of time.
Any others? The hooks and jabs are coming fast and furious.
You know what? I might as well. Because
all right, before that bell rings.
I'm got one more in here because the synergies aren't happening. Wall Street's not rewarding these companies, and they aren't getting to a big enough scale that they can actually do anything. And then Wells Fargo has so much regulation oversight, they have to organically grow. So the top banks can't do any more M&A. They don't need any more ATMs and branches. And so everybody else is just going to try and get together and figure out fintech.
All right. That takes us to round 3. Lindsay Davis versus Wade Arnold.
Oh!
And your fight is embedded finance. It's a good thing for banks.
While bank M&A is dead, embedded finance is not. I see a huge opportunity for banks to actually start to use the technology that has enabled FDIC insurance that they're already collecting as partners of prominent fintech companies we know, to open up access and find new ways of monetizing their customer base instead of feeing them, to your point about the billions of dollars that they collect. It's only 2% of their revenues to give up a overdraft fee, an antiquated thing that most banks are starting to go to zero on, but the big ones are too hung up to give it up. Embedded finance is the opportunity to displace that business model and start to create a new revenue stream by offering things like earned wage access or tapping into unpaid out wages that are already hung up just in ACH technology. Like, you, sir, are in for it. Do you have to tap me?
I may agree with this one, but I'll argue the other side. So if I'm a bank CFO, I hear this thing called fintech. Oh man, non-interest income, cheap deposits and a rising interest rate. What could be better? Oh, I don't know, being 2-3 times removed from the customer. I have BSA and AML policies that I got to figure out for somebody else's customer and underwrite that. No, thank you. I already can't figure out my own compliance program for people that walk into my branch. So there's no freaking way that I'm going to figure out how to do this for my customer's customer's customer.
Wade. Banks' customers are already disintermediated from their banks. But embedded finance is the best thing for banks that has come along in 15, 20 years. This isn't about a threat about being displaced. This is about new distribution channels, new way of reaching the customers that banks and credit unions, and banks in particular, have already been serving, both on the consumer side as well as the small business and larger commercial side. This is about partnering with folks who already have relationships with your target market and providing new ways. It's about new distribution channels, lower cost of customer acquisition, higher profit margins, because you're not wasting all that money on marketing and wasting all that money on silly front-end little bubbles and things like that that you think are serving the customer. They're not. Somebody else is already owning that interface. Somebody already has a relationship with that customer, and this is the best thing to happen to banks for a long time. You want to get in on this?
Sure. So embedded finance is a good thing for banks. What are banks? Banking is a relationship industry. And what is embedded finance? It's someone else coming in between, being the face of your relationship. So if you are the CEO of Wells Fargo, let's pick another bank, Chase. I don't want to be the CEO of Wells. If you're the CEO of Chase, do you really want someone else to be controlling the relationship and the direction and the strategy of where you want to be 10 years down the line? I don't. That's why if I were CEO of JP Morgan, I would invest in technology, and I would be at the forefront of that relationship management. But there are pros and cons to everything. So the con is you are letting someone else control the relationship. The pro is, you get high volume business by partnering into embedded finance. Let's say life insurance. It's very difficult to get people to buy term insurance. So sure, let's partner with Ladder, provide that service. We'll get high volume business for low margin. It's a new stream of business. So as the banking industry is getting challenged, the relationship industry is getting challenged, I, as a CEO of Chase, would want to look at new streams of business. And that would be my main reason as to why I would consider embedded finance. But I won't stop there. I would do what Jamie Dimon's doing and invest $10 billion and get at the forefront down the line. I'll take it back. No, she's my girl. Suck it.
So back to your point, your legacy way of thinking, sir, is actually accurate. There are firms that are going to think like embedded finance doesn't matter to me. They're not going to be here. The best banks are already doing this. It's already happening at scale. Embedded finance is unlocking opportunities that many of us are taking advantage of today. We just don't even realize it.
Yeah, well, a lot of my bank customers, they really like the service.
Do they?
We're just good at service. Aren't we, Ron?
All right, well, just in time for the bell. So that brings us to our speed round. So short answers only. So Ron and Ambika, you can get us started, but I want to hear everybody short answers only. The most important technology of the next decade will be what?
I am the champion. There is no such thing as a short answer from Ron Shelvin, okay?
Who writes 5 times on Forbes a month?
Bring out the ladder.
The most important technology of the next decade will be blockchain.
It will be a combination of cloud computing and blockchain. I wish it wasn't cloud computing, but banks are so far behind, so it would be a combination of cloud computing
The
and blockchain.
question is the most, not the two most.
I'm sorry.
It's the most, follow the rules.
I am. It's a combination.
All right.
What application of the blockchain, Ron?
I don't see that up on the board.
Wade, you're it.
The biggest technology change that's going to happen is AI. Because I know we all love these 4-story buildings where people go through workflow engines, but it turns out computers are pretty darn good at making decisions.
All right. You have last word, Lindsay.
Payroll connectivity. It's what I bet my life on. It's what I bet my career on. And that's why I do this every single day. I really do believe in the power of unlocking the paycheck for millions.
All right. Well,
Bet
let's
on
hear it for
yourself.
our fighters. And now we can choose a champion. I didn't have any knockouts, and there can only be one champion. Okay,
I almost
two,
knocked myself
because
out.
it was a tag match here. So by volume of your applause here, who are our champions? Who delivered the most knockout blows? Was it Ron the Shiv Shelvin?
Boo!
Lindsay Knockout Davis? Ooh, that was pretty close.
Good job.
Ambika, the Bay Area Bruiser Sharma.
Killing it.
Oh. Or Wade Moov and Groove Arnold.
Yeah.
I don't think I have to move. I think it's this side of the stage.
Yeah.
All right. Thanks, everybody.
Woo! Oh, man. You guys
Celebrate
get to
your
carry the
champion.
ladder. You're welcome.
All right, we're off again.